Okay, guys, let's get started. Before we dive into the live market, I just want to do a quick recap. Everyone should see my screen, so if you select my name to be able to view the screen, make sure you can hear me, and feel free to open up your mic if you have a question. I'm not always gonna see any kind of text chat, so if you have a question, just open up your mic. Let's take a look at yesterday. So this is the, you're gonna look up here. This is the 15-minute chart. Ticker is ES. You can see up there. You're in Trading View. You can see the morning started off, pretty choppy. We got the long year going up, but then it came down again. And then later in the day, when we were down there, I sent a message saying, looking like this is holding, and then we went up, and the indicators showed us, VIX gave us confirmation, and we got a really nice squeeze all the way up. We in the message, I said, look, we're probably going to break the previous day high, which is this line, and then we'll get a big squeeze there. But I want you to see how the morning can start off very choppy, and then if you decided to just stop trading for the day, you might have missed out on some really decent moves. So you have to realize that just because it's choppy right now doesn't mean that the rest of the day is going to stay like that. And also, just because it's a trend in the morning, it doesn't mean that it's going to stay that way. So, what I would recommend is that when there's messages, you know, take a look, get back in, look at the charts if you had to do something else. Yesterday, I also opened up the microphone when we were at the bottom, and I verbally told everyone that we're holding. I'm not sure if everyone was still listening, but one thing you could consider is just having Discord running, turn the speakers up, because my plan is to just pop on the microphone and say, hey, looks like it's holding, because these are the best moves. They don't always happen, but they're happening more frequently this year. But if you can catch the bottom and you know how to read it, then this this is really the trade that you want to wait for, and nothing in the morning mattered. This is really the trade of the day. Um, does anyone want me to recap yesterday before we go into today, or you just want to jump straight into today? So feel free to open up your mic if you want me to recap or just move forward. Making this when you um so okay, so good question. Now let's take a look. So this is the 15-minute chart. Obviously super easy to look at it after the fact, but that doesn't make you any money. So this is ES. You can see it's a 1 minute chart. We have ES at the top. We have a VIX here at the bottom. So I'm just gonna move back to yesterday, and obviously there's a lot of overnight data because we have extended hours turned on. But so so if you look at yesterday, obviously the morning was choppy. Okay. Now when it's choppy, then you gotta know to ignore any kind of signals. Okay. And we talked about it yesterday. So you can see VIX up and down, not respecting the alpha zone, and then you had just up and down. So you had down signal, up signal, and they were not good at all, because these signals, no signal should be trusted during chop. Okay, so then what happened was we got a good signal. Okay, and you can see this vertical line here. So this shows us the time on ES and the time on VIX. So what you see here is you have a good signal for a short. Now, maybe you didn't know if you could trust it at that point, but you can see VIX now respecting the alpha zone. And I explained yesterday, and I'll just recap it because it's so important. But if I look at VIX, it was chopping, in the alpha zone. The alpha zone here on VIX did not spread its legs. So VIX wasn't staying below or above it. So this is what chop looks like. So I use VIX to know that there's chop and to ignore signals. Okay. But then you can see we have a short signal right there. And you can see at the same time, VIX was then building an alpha zone. It starts getting bigger, and it was staying above it, which was, very nice short signal. Okay. Now, I didn't take that that short because it was choppy and I was busy coding, and but and you don't have to either. But what you then see, so you see the buying pressure staying blue all the way. And then it started turning yellow. Okay. So now you have a nice signal that's working. Okay. So the other signals, like if you look at this signal, it didn't work. Okay. Now, I mean, you could have made money, because it was like right here on the scan. Also, you could have made money, but I wouldn't consider doing a long year going into, the Bollinger Band as signal that worked. Obviously you had this. So, but then you get a signal that works. So you're like, okay, this tells me that the chop is probably over, because when you see things that immediately fails like this one, you know that there's still chop. Okay. When you see a signal then that works, that you see a beautiful alpha zone, you see it's respected, you see the VIX where there's an alpha zone that's respected, it stays above it. Okay. So now you're like, okay, this tells me that the job is probably over because it's starting to respect the signals, the alpha zone, everything else. So then when you start seeing yellow buying pressure, you're like, okay, maybe we're starting to hit a bottom. And then obviously you can see so much confluence here. So here we have the pre-market low. The brown line is the previous day low, I think. And then you have this dashed line. So all of these things are confluence. Then you also have the mean reversion bands. You have the Bollinger Band. So at this point, there were so many levels confluencing. Okay, if that's a real word. But you had a lot of confluence here at the same place. You had a respected signal. You had a long run down with buying pressure. Then you started getting yellow buying pressure. Now it could still keep going. Okay. But these are the first signs when you have this flickering lights, if you want, that says maybe maybe we're holding here. Okay. And you have to understand it's a maybe. So now at this point you see VIX agreeing, because VIX goes from yellow triangle to a blue triangle. You can also see that VIX hits this dashed line on the indicator, which is another confluence. Okay. You see VIX doing blue bars. You can see an alpha zone forming. You can see it staying below it. So if you're an aggressive trader, you could have taken a long at these levels, which I did, around here somewhere. I posted screenshots of the trades I took, and this was a quick, basically around $500, just grabbing it here, because and then when you grab it that early, you want to lock in profits more quickly. Okay. Because it could just be a trap, and you can see it goes up and then it dumps. So if you got in here but you didn't take your profits, then you give it all back. But then you have a big candle and it goes up. Um, but you're not out of the woods just yet, but you're starting to see more things. So you have yellow buying pressure, you see these dots, but then you see the money flow coming in. You see those vertical yellow bars. So those are good. You see VIX that keeps staying below it. So that's good. You see uh buy signal here. You see it spreading. You see the 2 minute triangle saying up. There's the 1 minute triangle. You see the green a reversion band, so that's saying, that's starting to form a trend up. And then the bears take one last try at this, but you can see that, VIX already, even before this small pullback here, VIX already gave you a warning that it might happen. But again, you want to lock in profits quickly. So then you had a pullback, but you still had good money flow. So that was positive. You got a 1 minute blue triangle saying down, but this is the beautiful reentry. So you have a 1 minute, and I call this the reentry triangle. You can see the bigger one, that's a 2 minute triangle. And then on the 1 minute time frame, you whiplash it. So you go change direction down, change direction up. So now you're above the VWAP. You got this reentry signal. You got VIX here. You got super strong money flow. You have the buying pressure that's moving up. You have the green dots. And so basically, this was a great entry right there for the long. And now, if you focus on this, so you could get in your take profits. Your first profit target has to be this upper band. Next one, Bollinger Band. But now your runner, you can see that you're basically staying above the alpha zone. So it's, again, yes, you dip a little bit into this, but that's just normal price action. But you can see that we stay above the alpha zone all the way, up here. So your runner, while you're respecting the alpha zone, you could hold the runner all the way up here. And then I said, hey, this is the previous day's high. And I'm like, okay, and I think I said it here, I'm like, we're probably going to hit this and then we're going to get a squeeze. And I said, it doesn't mean that we may not have a pullback first, but that's exactly what happened. We got there, we got a pullback, and then we had a great squeeze. And any of these things is can give you so much profit. So, the move from the bottom to the top, I think was like 45 points on ES, but it was like a 2,500 bucks move on a single contract, and it's almost like I think $4,000 or $5,000 on NQ if you look at it. But NQ charts are way more choppy. They're much harder to read because you just have just a lot of back and forth. So I like, even if I trade the NQ, I like to read the yes, but you can see the money flow stayed strong throughout this whole thing. That's very good. You can see there's one re-entry, and then the one the the blue triangles never came back. So it just stayed in there until you got there. So that's basically again, profit target at the previous day's high. All of these levels that's marked out on the charts, those are things to consider for partial profits, and then runners while you respect the alpha zone and stay above them. You could have reloaded here if you wanted to because you had a lot of profits from the day and you then expecting a squeeze because, again, we trapped all of these bears that were stopping out. Did that answer the question?
Yes, very much so. Definitely.
Yeah, so those are things to really keep in mind. So even if you missed the initial move, okay, because again there was a lot of confluence, there was the lights flickering saying this could hold, then you get the buy signal and the triangles and everything else, but that's not a guarantee that it's going to work, okay? And so you need more confirmation. So if you get in, you want to take your profits quicker until you get more confirmation. And I'd like, the VIX confirmation and I like the money flow confirmation. those are good things that tell me it's sustaining. And then if it stays above the alpha zone, you can get in on red candles. So if you see it staying above it, you can get in when it pulls back close to the alpha zone or into the alpha zone, and then you're just going to hold it. And you want to stay small, because even if you get the direction right, if you're getting in too heavy, you could still get stopped out and totally kill your account. Okay, so that was yesterday. So then, starting this morning, so this is SPY. So we see there's no new gaps here. These are all older unfilled gaps. So that's always good to see if we're gapping up or down. On the 15-minute chart, so you can see we're still above these these clouds. We're not pushing into the overextended levels here, or down there. So that's good. That's healthy. So this looks like an upward bias. But then this is the most important chart for you to look at. This is the 15-minute chart. You can see here, so we had the big squeeze going up, and we see the previous day's high there. But then we had an immediate failure, and obviously that's because of the worry about the government shutting down, and we totally just gave it all back. But what you then have to look at in the morning is this is a failed breakdown. Okay, and these things are so important. So you see this impulsive move down all the way, and they failed. So this tells me that for today, the bulls have the advantage. Okay, so this is going to the day. This failed breakdown overnight tells me the bulls have the advantage. So when we open up, we pulled back into the VWAP, and then we bounced really hard, and then we pulled back again. You can see how if you just bought the bounce of the upward sloping VWAP, you banked. And I mean, so this morning I took, a few trades, and I'm up $2,000 just based on the bounce off the upward sloping VWAP, and knowing that we had a failed breakdown overnight, giving the bulls the advantage. Okay. So I'm gonna just stop here. I mean, I want you guys to look at this chart and understand why I had a bullish bias going into today. Yes, we're above this cloud here. We're above the VWAP, but this is why we have a bullish bias to start the day with. And then going into it, we had a hard bounce, and then this moved too fast, too soon. And if you look at the documentation, I have some charts in there where I explain it. If it moves up too fast, too soon, it's not sustainable. So you're going to get a pullback. And you can see it just totally retraced that whole thing, and then it bounced again. Any questions? Does it make sense why the open had, more of a bullish bias? Okay, I'll take that as a yes. Um, so you guys have to understand that. You have to look at the chart. You have to understand, what who's on the wrong side. So all of these guys, stopping out, you can see. And now again, even if you know there's a bullish bias, if you're waiting too long and you're getting in long here at the top, you're gonna get stopped out and you're gonna blow up your account. Okay, so knowing the bias and knowing the direction is not good enough to be successful in trading. Gotta know that. Okay, so now we're looking at the 5-minute chart, and again you can see first here we dumped down hard, and then we immediately bounced. Um, upward sloping VWAP off the cloud, went up, and then we just dropped hard. We had some news there. I don't I don't like to trade when there's news, but I don't really care what the news says. I look at the interpretation of the news. This is hard dump, and then I got some longs here at the bottom, and they didn't have to work, but this gave me a $2,000, $500, 4 accounts that I traded individually because again, copy trading is not a great idea. And you can see that we're, still bullish. So now we're coming back into the day's high. Um, so let's just go back here. So you can see we have nice money flow. Okay. Now again, this is a range. Think of this as a box. This is bottom of the box, top of the box. So you shouldn't be getting into longs at the top of the box. You shouldn't be getting into shorts at the bottom of the box. Okay. So if you're not in a long year because you bounced off an upward sloping VWAP, then this is not the time to get into longs. Now, if you get into longs right now, can it work? Absolutely. You know, anything can work or not work. You have to understand that. But this is not the time to get into a long. You missed the move because I'm talking too much. Um, but you can see here where at the start you had strong money flow. Obviously, we dumped down. And I mean, if you just closed your trades because there was news coming up at 9:45 and 10 a.m., then you wouldn't have been caught into this trap. Um, but and you can see then we went down, but we still have money flow. So your bias should be, up because I showed you the trap pre-market. I show you the money flow. So your objective always is, what am I looking for right now? Am I looking for shorts or am I looking for longs? Okay. So right now, you're still looking for longs, but you're not gonna get longs at the top of the range. You want to wait for a pullback, okay? And the closer you can get into the alpha zone, the better price you get. If you're gonna overpay because you're getting into longs here, you're exposing yourself to way more risk because the market is being reverting. So you should expect that it goes up and then it comes back to the alpha zone, goes up, come back to the alpha zone. And you can see that from yesterday's price action as well. So if you're not patient and you don't want to miss the move, you're going to blow up your accounts. And again, this is not financial advice. Um, this is just entertainment. So always keep that in mind. I'm just telling you how I trade. Or how I should trade. Sometimes I break my own rules and then I'm like, oh yeah, that's why I have that rule. So um, it is very simple. If you chase a move, you're putting yourself at risk. You're stacking the odds against you. So you're going, if you're going to get into long year, you're likely going to lose money. Even though right now the bulls have the advantage and we will likely go up. Now, if you just get one micro, you could argue, well, that's fine, but it's just going to add to bad habits because you're going to get in prematurely, and then as you scale up, you're just going to blow up your accounts. The better place would be to put, standing order here and stay very small because again, even if you have the direction right, if you get 3 or 4 minis, you're going to blow up your account and then it's going to move on without you. You're going to say, oh, I knew it, I was right, and you were right. But to be successful, you have to master the whole execution part. It's the patience to wait. It's the patience to put in a limit order here. And if you never get filled, then it's okay. It's totally okay not to get in. Um, but those are the complexities. But yeah, so basically, can I take a short year and make money? Absolutely. But you have to understand that when you're trading against the trend, it's very unforgiving. So if you're going to get in a short here, you have to lock in your profits quickly. It's better for you to do a long on red candles. And then the question is, how many red candles will we have? You could say, okay, I'm going to buy on this red candle, or I'm going to wait until I get here. And again, this is not a signaling service, so I'm not going to tell you when to get into longs, because again, it is very complicated in terms of sizing and everything else. I'm gonna help you read the signals, but you can see the bulls have the advantage. So you shouldn't be looking for shorts. You should be looking for longs, in my opinion. And again, not financial advice. Let's take a look at VIX. And you can already see this morning, so you can see here, so we came down and then VIX, so if you look at, let me just see if I can better align it. So if you look at this, VIX immediately went down and it told you to go up, and then VIX went sideways and then it started dropping. So VIX already told you to get out of your lungs. VIX already said, hey, if you wanted, you could take shorts, but it said get out. And then VIX here said, okay, now I'm moving the opposite direction, and now the move starts back in the upwards direction. So for me, watching VIX at the same time is like, a big secret. It's like part of, why I take better trades, because I could see that VIX is not choppy like it was yesterday. I mean, I showed you VIX yesterday. I'm like, this is choppy. This is not, stay out of a trade. I mean, if you wanted to take a trade, there were some opportunities, but the better trade was when VIX settled down. And so you can see VIX is, moving down, it's staying below it. So VIX is voting for up. You have the money flow up. You have the buying pressure up. You have the dots up. So the only question is, you know, when do you get into your longs, but you're not looking for shorts. And then this is NQ, um, and you can see here, you can see how this is what I'm like. NQ, it's like it's just harder to read because you have an up, down, and here's the clean up, because this is just so choppy. But then if you look at ES, it's just way cleaner for me, at least for my eyes to see. But I like to look at them both. And so right now, like I say, bias is up. Okay, so getting in on red candles, and again, it could change at any time. Okay, you have to remember, right now the bias is up. Um, we might just go and test the all-time highs again, but we're not looking for a short. We're looking for longs. Okay. Any questions? Again, it's not a signal service. I'm not going to tell you exactly when to get in, when to get out. I'm here to educate you. The closer you can get into a long at the alpha zone, the less money you risk. Um, but you're definitely not looking for shorts. Now, if you get in and you stay small, then you can hold longer. But again, the first thing is to get a cheaper price, to get a better price. Okay. And like if you get into long now, you're overpaying. And you can see here, these dots, that's the overnight high. So again, that's the level where we expect a pullback, where people, why do we expect a pullback at overnight high? Well, because if you look back, that's the overnight high, okay? And we expect bulls to take profit close to the overnight high. And that profit taking, when you're in longs and you take profit, you're basically shorting the market. So that profit taking puts downward pressure on the market. And usually those are good levels where you can expect to get a pullback and get better entries. And I mean, these pullbacks might be shallow, but they can also sometimes go very deep, because that's also where the bears will say, this is my last chance to, turn the market down. But while we have money flow and buying pressure, you know, you're looking for longs, or you're not looking for shorts. Okay. Am I making sense, guys? I know I talk too much sometimes, but knowing what direction to go is like the most important thing. Sorry, say that again. Sure. Great. And so guys, so I'm telling you like how I read the indicators or what they tell me, but I think you shouldn't be shy to say what you're seeing, because like we rely on Mancini as well with these levels. So I mean ultimately I would like to get this group where we're all looking for entries and we're like, hey, Mancini said this is the level we have to reclaim to go up, and and this looks like a great entry or a great time to enter. So I mean, so the more and also remember, like, if you learn math and someone gives you like yours is how you solve the math problem, you're never really good because it's easy to listen to an answer and say, okay, yeah, that makes sense. Okay, what I'm telling you, okay, that makes sense. But for you to go and put yourself out there and say, this is what I'm seeing, and you're solving the math problem yourself, is going to make you much better at it. So when you become a teacher in this group, you will become a better trader. So it's all about practicing, and a big part of practicing is also teaching. So I want you guys to feel free to get on the mic and say, I think we might see a pullback here at the overnight high because of profit taking, and bears might use this as an opportunity to push back. So we might see a deeper pullback than usual. Um, I mean, so I want you to feel comfortable, you know, taking more of a teacher role as well. And then obviously, if I disagree with it or I see something else, I'll help guide you, and then you'll get more of out of this as well. Now, so here we touch the alpha zone. So, like I say, those are reasonable places to get in to longs if you're looking for long. Like I'm saying, I'm only looking for longs until I see something different. But so the question is, like, how far of a pullback do you want? Usually, I mean, if it's a deeper pullback, it can go to the bottom of the alpha zone, and you can get in there. Um, so if it's any deeper than that, then it becomes a little bit more risky. But you can see the money flow is still there, buying pressure is still there. And then, I think watching VIX is super important. So if you can have a separate chart open, because if VIX, so you could have VIX come down, and you could see one yellow candle, but then it goes down. So there might be these fake outs, but until VIX is starting to have like consistent candles moving up, you know, the bulls are still feeling good. And then again, I like to watch both ES and N. I can hear you. You're a little soft, but I can hear you.
Closer. Can you explain the correlation of the
Are you talking about the gray background right there? Oh, green. Yes. Oh, so so these bands here, so you can see there's a blue band there that sometimes turned red, sometimes green, and it's got an upper band, a lower band. So price likes to stay within those bands, and those bands are Keltner channels. Okay. Um, and then we also have white bands, which um, so there's the bottom white band, and that's the top band. That's a Bollinger Band. Price likes to stay in between them as well. Now for the Keltner channel, I call them mean reversion bands because if you don't have a trend, then you tend to just bounce between them, and so you tend to get a short at the top and a long at the bottom, and it tends to work out well. But I also use that opportunity to color code it. So if that blue band turns green, then it means that we're getting a nice trend move. Okay, and if it's red, we're getting a trend move down. But then if a bunch of other things align as well on the trend up, then I color the background green to just tell you that, there's a lot of things I look at, but this is just basically saying that, right now, all of the stars are aligning, okay, with that trend move up. So hopefully that answers your question, but it's basically extra confirmation. And again, you're staying above the alpha zone, as long as you do, your runners uh, should, you know, do okay. Does that answer your question?
In general, correlation is green by
Yeah, so the green has absolutely nothing to do with the money flow, so you're gonna get green even if there's no money flow. Uh, so if you get green plus all of the vertical yellow bars, I mean these vertical bars, I mean that's really one of the stronger indicators when you're in a trend move, saying that it's still on. It's money's piling into the long side, and so like even when you have like a dump like this, the money flow is saying not to give up on the lungs just yet. Okay, so that's how I read the money flow. The money flows say, even when you, so the point is, if you have money flow, and you get into a long year, you would have just totally killed your account. So you have to understand that money flow doesn't mean you're going up. Yellow money flow, and you're going to get blue money flow on the flip side as well. But and when the market opened, this gray is market close, market open. So you should always expect a big change at the open because of extra volume. But when you have strong money flow, yellow money flow, it tells me not to give up on the long side yet. So that's how I look at it, if that makes sense. Sure. And I mean, there's a lot to learn here with the indicators. So I don't want you guys to think the indicators is this magic bullet where you're just gonna take longs every time you see a yellow arrow and shorts when you see blue arrow, because that's not gonna that's not gonna make you money. It's like any expert tool. It's gonna take time to get to know it, and you're gonna watch a bunch of videos that's probably outdated, or we can do this live where it's just a little bit easier to learn, basically on the job, if you Yeah, so I sent you a link to the document that lists all of the indicators, and it's got some templates already that's pre-configured in TradingView, so that you can just, So I would just, if I were you, I would just start with the same setups that I have here, and then start with that, and not try to reinvent the wheel. But the document I send you contains, links to everything, and then there's also a couple of videos that will explain things. And then, if you have questions, obviously, just ask. Absolutely. And you can see here, so we said, hey, when we get close to the alpha zone, this is a decent place to get into longs. But so if you got in here and then when you get a big candle in your favor, it always makes sense to lock in, some profit. If you didn't, then you just gave, everything back. So you can see here, so we have blue buying pressure now. So the question is that going to result in a bigger move down, or is it going to be just a deep pullback before it goes back up? And no one can know, obviously. But I want you to see how right here already it turned blue. So if you got into the long here at the alpha zone, and then you see it turn blue, that like right here on this candle, you already had the indicators telling you to lock in your profits. Okay, so this is very important because like you don't have profits until you lock it in. So I mean, so if you got in here at the bottom, then obviously you have a big cushion built up, and then you don't have to be locking in profit aggressively. But if this is the first time you got in, then this immediately tells you to lock in your profits, and you could miss out on a big move to the upside. But you're it's very important to lock in those profits, and then you can re-enter again as it goes lower. But this is very important to see how the indicator told you right there, lock in your profits. Again, if you just get in, if you're from down here, you already locked in profits at the different levels, and you could hold your runner longer if you wanted to. Now, so this, this, if you look up here, this green triangle is saying that, okay, so let me just take a step back. So the yellow line here, that's the buying pressure. That's saying buyers are in control. And I also use the same color on the alpha zone down here. And then when it's blue, I also changed it on the alpha zone because it's so important. So this yellow says, um, in my indicators, yellow is always up and blue is always down. So this is saying buyers are in control, and then sellers are in control. Buyers, but it's dimmed because like I look at MACD and a bunch of other things, and I'm like, okay, so yes, they're in control, but it's not strong control, so I dim it. Okay. Um, and you can see why, because it just went up a little bit and then it dumped again, and then but then when everything starts aligning, then it's bright yellow again. And you can see it stays at, and then the sellers get in control. So you're like, okay, okay, I gotta get out of my lungs. Okay, so this is so important, guys. This is just helping you to know when to lock in profits, when the tides might be changing. This is like my favorite part of all the indicators is buying pressure, and that's why it's both in the money flow indicator as well as the alpha zone. But also like when so I look at like over time, and then I'm like, if the buyers get into control, in a stronger way, I give you a green triangle there. So this is saying buyers are in control. So even though, you know, there's a temporary downside, it's still saying the buyers are in control. And then when there's a strong flip in the seller's control, there's a red triangle. So so this green triangle works with the yellow there, and the red works with the blue to say there's a more of a definite flip where sellers are in control. Now, my bias is still bullish. So can you take a short based on this and make money? Absolutely. But the way I trade is I'm still going to say wait for this to play out so I can get a better price for the longs whenever that happens. But so that's what these red and green triangles mean. And then on this indicator, if you click on the gear icon, you can go and turn those on so that they're shown down here as well. So when you click on settings and enable them, you can see the dots there because it's still updating. Unfortunately, it's a little slow if you make changes because it's just such a big indicator. And I try and put everything in one place so that if you have a cheaper version of TradingView, you don't need to pay for a bunch of indicators. But so you can see here's the green triangle right there that lines up with this one, and then you have the red triangle that lines up with that one. Um, Usually I turn it off because I have it up there and I don't want extra clutter on my chart, but you can decide to keep it on there, but you can also just look at the different settings. Um, so you can see, so you can see blue buying pressure, sellers are in control. There was a definite flip there. We're still, above the alpha zone. Um, I'm still bullish because of the bear trend, the failed breakdown in the morning. VIX is going sideways, so I mean it can go sideways and then bounce, or it can go sideways and down. So VIX is because VIX is going sideways. It's like okay, I'm not sure. The market's not sure what it wants to do. Um, but this is not the time to get into shorts because you're basically at the bottom of this box. So just draw a box around everything, and then you're like, am I at the top of the box or the bottom of the box? Or at the bottom of the box. And if you're at the bottom of the box, that's not the time for shorts. If you're at the top of the box, that's better probability for shorts. If you're at the bottom of the box, better probability for the longs. Okay. Again, I'm still I'm still leaning bullish, but right now sellers in control. Now yesterday, if we go back to yesterday, I want to remind you. So if you look at yesterday, we went down, we got a blue triangle, and then this yellow triangle many times is a nice re-entry because we got a deep pullback and then we you can see this alpha zone never inverted. So the thick line of the alpha zone has always stayed at the top. So even though it went blue for a little bit, the thick line didn't go to the bottom and inverted like this. So you see thick line inverts on top and it stayed on top. So when you look at that, the alpha zone is still positively slanted. It has not inverted yet, but you don't want to, I mean, if if you get into a long year, you're going with the buys of the day, but it's still you're still risk you're still risking the trade, which is perfectly fine because remember, the idea is to use prop accounts, and so this is not so if you took a long year at this red line, it's not an A plus setup. So it's not a trade you want to take in one of your funded accounts. It's a trade that you want to take in one of your test accounts um, because you could afford more risk there. but and it's also definitely not a trade you want to take in your cash account. But I highly recommend against trading your cash accounts. Prop accounts are so much better because you're risking the money you spent on buying the prop account and not real cash. If you cannot be profitable in a prop account, you definitely cannot be profitable in a cash account. Exactly. The red line and the green line at the bottom, those are very strong levels. Those are the high and low for 9 a.m. to 10 a.m., which is very strong levels. So that's a good place to go in along. Again, it's not an A plus setup, so it's not something you can take on a funded account. Um, but again, even though you have sellers in control, this is this is a reasonable pullback because of people taking profit. So you have to learn what um, price action looks like, and is this like expected price action to know if the long is still on, and you can see how the alpha zone is still bullish, even though the sellers are temporarily in control. You had that flip there, but the red line is always a decent place for longs. And again, nothing has to work, but you can see how many times it got touched. Like one, two, I mean, like all of these candles touched it and it's holding. So that's another bullish sign. And then at the bottom, you have the green line. So, if you're below it, it's going to act as resistance. But yeah, I mean, so if it touches it too many times at some point, it may fail and go down. Um, but this yellow line, sorry, this red line is the line we need to hold for now. You can see VIX is still moving sideways, but it's still below the alpha zone. So I don't. So we see some sideways job, but I don't see anything yet that tells me that the long is over. Okay, and again, the most important thing you can learn is to know what you're looking for. Because if you're going to look for shorts now, you're more likely to blow up your account. Um, because you're going to get probably down here and you're going to say, okay, now we're going to break down and you're going to get in shorts. And then you're going to keep changing your mind. And, so on that topic, while we have Chop, let me just do this again. So this move here, you know, up there was like on EA's like let's just say $2,500 move on a contract. Now on minis, sorry, on micros, it was in other words $250. On NQ, this was like let's say a $4,000 move, and on micros it was $400. Now think about what a huge move that was and what a big squeeze that was, and then you think to yourself, okay, yes, $250, $400 on micros, that's a lot. But look at how hard you had to work for that $250. And then think back where you trade micros and you keep changing direction and where you get two or three contracts and how quickly you blow $250. Okay. So I want you guys to put it in context and say, hey, if I'm going to get two or three contracts and I keep changing my directions, I could blow $1,000 in a heartbeat. But to make $250 on ES Micro, I have to work so hard and hold so long, and that really helped me to say, wow, okay, if every time I change direction, I'm totally blowing up my account. So if I could just figure out which direction I'm looking for right now and just sticking to that and only take those trades, I end up doing so much better. So hopefully that's helpful, but that helped me a lot. It's just knowing which direction I want to trade and just be very strict about not going the opposite direction. And even if I'm wrong, I mean, I could still be wrong. It doesn't make me right, okay? But it totally cuts down on my losses. Like right here, it's so easy to say, okay, I'm gonna go short because it looks like it's not making progress, and then you get in shorts at the bottom, and then it turns on you, and then before you know it, you just do your whole prop account. And I think Nina will tell you the same. I think, because I've been working one on one with Nina for, a little bit, and I think she found that advice very valuable, and it's also exactly what Mint. Well, he only longs, he never shorts, even if it's a complete breakdown. He knows it's only going to last so long. You can see the yellow buying pressure, so the buyers are getting back in control. It's still dimmed because like I forgot all the things I look at, but I know one of the things I look at is MACD, and this is the only place where I really look at MACD and ADX and a bunch of other stuff. But because I've been working on these indicators for probably 3+ years now, and so I don't always remember what Magic was, what part of it. So you can see VIX starting to hold here and maybe pushing up. So it's your first warning to just be careful in any kind of longs. Again, just because longs are getting a little bit more sketchy doesn't mean that it's a short. Like again, if you if you bought at the red line and just hold, it's working. And what you have to understand is that sometimes you have a very slow grind up, and so you have to be able to hold through red because no one's gonna have trades that's just always green. So you have to be able to get in at these levels that's on the indicator and just hold it, and then know, yeah, okay, it's are you wrong or not? And but again, my bias is still long. And then the question is, where do you get in long? And then you just hold, because if you have profit from the morning, you can hold much longer. And so sometimes the VIX will go up just to get people to chase the move down and trap them. And when people chase the wrong direction, they become fuel as they stop out in the opposite direction. So hopefully someone's catching some of these longs, because I mean we had a clear bias all the way for long, and if you understand it, you'll understand why there's no short in there. Not that you cannot make money from it, but you can clearly see how this level marked in the indicator acted as a great entry. I mean, because like we said, this was a good entry right here when you touch the alpha zone, but it was exactly on that red line. Okay, so took profit there. Even if you held, you're totally banking right now. The VIX, and it's still below the alpha zone. Yes, is it going sideways and not sure what it's doing? Yes, but that's just the market trapping you to go the wrong direction. And I mean, don't be shy to lock in profits on big candles. I mean, I always do until I have some uh, cushion build up so I can hold longer. You should, if you don't have the profits for the day, it's really important also from a confidence level to lock in profits on big candles. It will build confidence. You can see money flow coming back. This said right here, don't give up on me just yet. And it could be wrong. Okay. Hopefully it's making sense. I'm gonna mute my mic now because you know we got a nice long trade here. How long will it last? Um, let's take a quick look here. So the other thing that's important is to look left. Okay. So go back to the 50-minute chart, which is one of the more important ones. You can see here that there was a resistance level around here, but then the next resistance level is going to be the previous day's high. So everyone's going to lock in profits around here and around there. If we get to this red line, that's going to be a little overextended. But you always want to look left on the 15-minute chart. You can also look left on the 5-minute chart, which is a little bit harder because there's more candles. But it's always important to just zoom out and say, okay, where do I expect interaction? These thin blue lines, that's also, an overextended level. So if we hit into them, usually we reject. You can see that in the morning here with the price movement up. As soon as we hit this thin blue line, we basically backed off, backed off, and then we went down. So when you get to the thin blue line, that's almost always smart to lock in your profits because you're moving too fast. Okay, so you see price move, we touch it, boom, lock in profit. Come back, touch it, lock in profit. Okay, and then we just had to digest that and move up. So if we have a sudden move up, and if you get close to that thin blue line, it's time to lock in your profit. And now if you stay above it, then you're in a strong trend move, which doesn't always happen. So, but that's a very important dynamic take profit level. You can see here, so big candles. If you don't lock in profit, you are just gonna give it all back. Now, again, if you got in at the beginning of the move because you bounced off an upward sloping VWAP, then, your runner, you could hold your runner. Now, a better runner would be if you stay above the alpha zone and you're cutting into it. So, you probably wanted to lock in your runner against there, somewhere there. But if you have a ton of profit, you could say, hey, I'm still going to hold for a possible squeeze here with targeting the previous day's high. But don't don't be greedy because you're going to just give it all back. And then again, so you take your profits in big candles, and then when you come back down, now you have all that profit, so you can reload here when you get back into the alpha zone. Okay, you get back in, and now you're double dipping. Okay, I'm gonna mute my mic. If you have any questions, feel free to speak up. You can see how our bias, is long, and we didn't see anything that says that the long is over. So many traders will totally short once they see three red candles, and then just as they short, it turns against them, and they just lost $200-300 right there. And that's what I'm trying to explain is like decide your direction and stick to it. Don't keep changing direction. You have a green upper band, you have a green background. You have the overnight failed breakdown. You have this failed breakdown right here, the bounce off the upward sloping VWAP. So I always say, look in your rear view mirror. You just passed, this accident scene where the failed breakdown. That's going to influence the, the trades. I mean, these guys are still in pain, and they're gonna try and revenge trade it and add to their bad trades. But they're on the wrong side of the trade, and our target, I won't be surprised if we hit the previous day high here, um, next couple of hours, sometime today. Um, but that's the target. And once we get there, we could hard reject. I mean, anything can happen, but for me, I've been just taking longs here and nothing else. And long on, and then profit on big candles. And, the runners, like I say, it's a little bit choppier, but if you have a lot of profit, then you can say, as long as it stays above the lower part of the alpha zone, I'm gonna hold my runner. But usually better to keep your runners while you're above the top of the alpha zone. Now, if you watch NQ, you can see that it just rejected the previous day's high, this orange line. So, so that's obviously, it could be a warning flag. And the trade gets way more complicated now than what it was this morning. Got it there. That's why you want to hold longer and not try and buy at the highs, because this is where it gets more risky, but you have nice money flow, buyers in control, and this is just standard chop as they digest. So it's still not a short for me. I'm still looking for the long until VIX. I mean, if VIX if VIX starts breaking above the alpha zone, then I'm definitely not looking for longs anymore. It doesn't mean it becomes shorts. I mean, it you might just say, okay, I'm still just gonna wait and see what happens. Can you make money on shorts? Absolutely, but rejecting that level is bearish. And that's why it's important to watch both ES as well as NQ. You can see your VIX goes up, so now it's cutting into the alpha zone. So this might give us a deep effect. But again, I'm happy not to take the short. I'm happy to see if I can get a pullback to this red level and bounce there, or even VWAP, because I can make money on the short, but the long is not completely over yet. It might be, but it could just hard bounce. So I'm just gonna watch VIX and see what it. You can see how they just grabbed some more bears there, chasing this, and sometimes that's a very good long. I mean, it's very choppy right here with VIX. But if you can convince bears to chase this move down and then you turn against them, this might be a very nice long. And again, it's not financial advice, but the more people you trap, stronger the move becomes in the opposite direction. Also remember that the best trades are the hardest trades. The VIX still going sideways, but it's still not breaking above the alpha zone. So watching VIX for direction is not a bad idea because this will help determining what the market wants to do. VIX is never a guarantee, but I like to watch it.
Can I ask you, have you noticed whether there's a bit of a lag, the movement of the VIX vis-a-vis ES, or is it pretty close to instantaneous when you see like, a triangle thing?
Uh, so so good question. So VIX is based basically on options, and it's based on option pricing and movement over the next 30 days. Uh, the indicator I use also look at VIX 1D, which is based on today, and then VIX 9D next 9 days. So it's definitely not instantaneous. And honestly, when you're at the all-time highs, sometimes VIX will push up at the same time as ES because of that nervousness in the market. So what VIX really just tells you is like how nervous the market is, how scared the market is, and so the higher VIX is, the more scared the market is. Usually, the bigger the price movements, the bigger the ATR. Um, so there's definitely not an instantaneous move. It is sometimes VIX will front run it, sometimes after the fact. So there is no easy, clear answer when it comes to that. But when you watch them at the same time, you get a better feel for what it's trying to tell you, and when to ignore it. But when VIX is a sudden price movement, not just one candle, because like here you can see VIX having just one big candle and then backs off. So one candle is not enough. But when I see VIX having like here where you have, 1, 2, 3 strong candles, I never, when you have two or three, I never ignore it, because usually that's a clear move and impacts the price of the indexes as well. So I know it's not a great answer, but I love VIX because I'm familiar with it, and the colors are combining you know VIX VIX 1D and VIX 9D to give me a better read, but it can sometimes give you incorrect direction as well.
Way you, I'm asking?
Yes. So I I removed the arrows from VIX, on purpose because they are, misleading and not helpful at times. So I basically just hide it. When I see you're on the VIX chart, I just don't show it because I think it doesn't work as well as it does on the other charts. You see, VIX is moving; it's moving sideways, but it's still below the alpha zone. So can you make money on the shorts? Again, you can make money on anything, but the alpha zone is still positively sloped. VIX is still below the alpha zone, so I'm not looking for shorts. And I mean, when I say something, it's because I trade ES. So if you look at like right now, um, NQ is weaker, so you definitely could have made some good money there because again we rejected the previous day high on NQ, so that was a better short trade because of that. You can see that the alpha zone on NQ is starting to get to the point of possible inversion. But then you look at ES, you can see it's much stronger. It's not at the point of inverting the alpha zone. So so I'm still not interested in shorts, and it doesn't mean I'm right or that it's the right trade setup, but I prefer to decide that I'm looking for longs or I'm looking for shorts and then only trading those. And even if I miss out on a great short, it's okay. But did I answer your question on the VIX?
Yes, thank you. Let me, can I ask you, do you ever look at the Dow, other less panicky meant to trade compared to NQ?
I do not look at anything else. Now, I'm not saying that's a good idea or not. Now, are you familiar with Adam Mancini? Because I do talk about him a lot. He's got his own newsletter, Amazing Trader. Um, he will tell you, and I will tell you the same, that my trading drastically improved when I stopped looking at all these other things. Um, Once I started just focusing basically on ES, my trading got much better because I have a much better for the price movement, and I'm able to focus on the charts and not be distracted because in the past I was trading Tesla, I was doing this, I was doing that, did a lot of options trading. And I mean, and I made money, but I was totally losing out on the big trades because I was looking for shiny objects. And I only really figured things out once I started focusing. So Adam Mancini will tell you, and he is one of the best traders out there in my opinion. His newsletter is $25 a month. When he tweets, we post it in Discord. We spoke about that, but he will tell you the same thing. He only got profitable once he narrowed his focus to ES. That's all he looks at. He doesn't even look at NQ. He doesn't look at anything else. He doesn't look at VIX. He doesn't look at anything. He just looks at ES. It helps him focus. And I would challenge you, if you look at all these other things, to try it. Try it for a month. Just focus. Focus on learning the tools, practicing them, honing your skills, but also limiting your focus. Stop looking at Tesla, Microsoft, Dow, or any of these other things because it doesn't matter what they do. It only matters what ES is doing, the thing you're actually trading. And I think you're going to find that you do much better because there's so much to consider and look at that that lost focus is really what keeps you from extra profits.
I'm glad I asked that. You look to
Yes, and I mean, and honestly, there's
something that
no dumb questions, man. And I know they always say it, and it's such a cliche, but it really there's I mean, I've made every mistake in trading in my life so many times that I'm like, I thought I was smart, but I feel like an idiot. And it's just like you drain your brain by looking at all these different things. So definitely, any kind of questions, ask it. And I'm not saying I have the right answers or anything. I'm just talking from my experience, and it's not financial advice. And again, you could see how tempting that short was. I mean, can you see that? How easy it would have been to just say it's time for a short? But our target was previously higher on PS, so we might be pushing up there. And then once we get there, you know, we probably will get a pullback. I mean, anything can happen, but there should be profit taking there, which could give you a pullback. But it could also just really go right through. So you just you never know. And that's why I always recommend to lock in, some profits. Don't be greedy. And that's the same thing. If you got in here, you have a big candle, you gotta lock in and not give all your profits back because nothing's a guarantee. The market can totally reverse right here, right now. And you gotta know that. Um, but this is healthy price action, and the long is not dead yet. And I always say yet because you always have to think about both sides. Okay, is there any other questions? I'm gonna drop off here. If hopefully this was helpful, but if you have any other questions, I'm happy to answer as many questions as you have before we drop off. Well, just wait until it hits the previous day's high. Looks like we want to do a little bit of here. Now, you also have to understand that it doesn't have to hit that level to the tick. So, you got to know that the smart traders will lock in a little bit before important levels. And so you might never hit it to the tick. You might just reject for it and people locking in profit and down. So when you get this close, so that's 43.50. So when you get within $1, that might be good enough to consider it as a hit. Because again, these guys will lock in the profit and say, hey, I rather, so point on ES that's $50. Like, why in the world would I wait another $50 of profit before I lock it in when I'm up this much? I mean, is another $50 gonna do anything for me? And they're like, I'm just gonna lock it in right here and call it a day, and I'm done. I'm just gonna go lie next to the pool, go to the beach, go for a run, go for a hike. So you have to understand that this might be all you're gonna get today with people taking profits. We might hit it, we might push right through it, but don't be greedy. Another $50 of profit is not gonna make a difference. Okay. So I mean, we still have strong money flow. NQ still looking good. VIX looking good. So we may break through it, but don't be greedy. Lock in profits. Don't hold on to your runners. Sorry, don't hold on to your losers. But if you can get a runner and hold on to it, that's how you get the upside. But you only hold runners when you locked in profits, okay, and you have a stop on that runner. So basically, there's no way that you can go red. That's the only time you should be holding runners, is like it's impossible to go red. Locked in profit. You have a stop loss. Okay, so that's our lesson for the day. Like I say, I'm feeling a little nervous about it just turning around here. Anything's possible, but everything's still looking good for the upside though. There's no short. Okay. Any questions before I let you guys go? I will just mute myself. I may pop back on the microphone if I see a reversal. Um, I may not see it because I might just go for a run, but there's no signs for a short.
Thank you.
You're so welcome. I'm always glad that you're asking questions because you know it's helping other people as well. Thanks, guys. So Datalex, it's your first day. Tell me, was it helpful or do you still feel lost or overwhelmed? I should say.
Of course, I'll do a couple of strong card. Upside is not help me avoid getting almost jumping plays that I'm on.
Oh, you're welcome. Great. And so it hit our level. And again, like I say, it didn't have to, but you know, it hit that level. So now this, if they like reject here, it might be a hard reject. So this is where you want to be careful now. The lungs are not over, but a, a reject could happen very fast here at this level. So you have to know that. So at this point, if you still have runners, you want to tighten up your stops. So you gotta move up your stops so that if there's a hard reject, that you don't give away all of your profits. So that's part of the trade management. But the long still looks good. Um, you know, we could totally start squeezing here. And again, look left. So if you look at this, um, and actually let's go to the 4 hour chart. So if you look at this, so there's all-time highs there, and it's below the red line. So, and that high was overnight, so there's unfinished business there. Yeah, so I mean, so I won't be surprised looking at this if we take a dash to the all-time highs and see if we can break it. Um, it's 11:38. It's still there's still plenty of time left for some crazy action. But yeah, don't give back your profits. Target. Yeah, you know, like I say, if you get to the close to the all-time highs, VIX could actually spike and go above the alpha zone, and you could still move up. So when you get close to the all-time highs, if it happens today, um, just know that VIX, you know, you shouldn't be surprised if VIX spikes because again, VIX shows nervousness, and when you're at the top all-time highs, everyone's getting nervous because is it going to reject? Is it going to move up? So I wouldn't use VEX as you know anything trustworthy when you're approaching the all-time highs. So at that point, um, it gets harder to trade. But you know you can look at the money flow, you can look at the buying pressure, and it's still looking good on ES. It's still looking good on NQ. So we definitely have a shot at going for all-time highs here.